Hey, today I want to share with you a process that I do for my clients that is something that I don't see a lot of agents doing, but I want to show you the secret sauce behind how I provide value to clients that are looking for mortgage information. So I have a client here, we'll call him John Smith. He is coming up for a renewal, but he came to me with a request to see if they can get something better. So this is like a custom proposal that I send over to my clients that are looking to get a mortgage. So he's up for renewal. The rates he's been provided are a little bit higher than what I can get for this client, but I want to show you how, let's say, a refinance budget would work. Yes, you can just straight up renew with your bank, but understand that your bank will offer a rate that is at least 15.15% higher or 15 bips higher than what I would be able to or another agent would be able to do for you when it's time to renew your mortgage. And this is still new business for a bank. And banks are only able to offer certain amounts, but because mortgage agents have access to others, this may be a time to reevaluate where your money is actually going for the next couple of years and to set yourself up for success in the future. So this client, I'll give you a little background. They have a little bit of debt that is right here that I've listed. It is a Visa plus a line of credit. So we're going to do a budget scenario that involves either paying out the debt and not paying in the debt. So let's run that budget. So currently they have a mortgage of 2.84%. And when it comes up for renewal, they're being offered a rate between 4.6 and 4.8. Now, their monthly mortgage per week goes out at $403, but they're paying about $1,400 per month to the mortgage. And they have condo fees along with their property taxes. And with their payments going out to the line of credit plus the Visa, we're looking at a total household payment of $2,966. So close to $3,000 is coming out of their pockets, right? So I wanted to run a custom scenario for them. So the first budget that I ran is a refinance budget, which involves not paying out the debts, just a straight refi with getting a 25-year amortization versus a 30-year amortization at a new lower rate of 4.44%. Now, this is just a fixed rate because some clients like to make sure that the payments are not changing every month. They want a fixed payment, so we're going with the fixed option right now. So their annual property taxes are there. They have a lot of equity in their property, and we're just going to be increasing their balance a little bit because with the refinance comes the lawyer fees that you have to pay. So we are allocating that in the breakdown, and you'll see the left side is the 30-year amortization and the right side is the 25-year. Even with increasing the budget, we are still seeing a payment decrease. So it'll be about $2,800 with the new lower rate, but their payments have decreased even though the mortgage balance has increased a little bit. So with the lower rate, we're still looking at a payment drop of $1,326 along with the payment that they currently had, which was $1,430. Now, why is that happening? Why did the payment drop? Because we are actually increasing the amortization on this. So with the 30-year amortization, you will see the payment drop because it's being divided amongst another 5-year amortization increase. Now, for the refinance budget with the 25-year amortization, you will see that the payment does increase because we are only going up to 25 years, which is usually a standard for when you're purchasing a property. You will only get about 25-year amortization. But if we cut back on the amortization, because we're increasing the balance, the payment does go up a little bit to $1,457. And the monthly, if you want to see it monthly, because the client is used to paying on a monthly basis for $403. At a 30-year amortization, they're paying $306. With the 25-year amortization, they're paying $336. This does not include paying out their debts. So they still have their Visa and line of credit payments going out. So their payments are not really dropping that much. Now, what I want to show them is this refinance budget with the debt consolidation component. Let's go into the 30-year amortization. We remember that their payments going out monthly were $2,304, just the mortgage and the property tax. Now, with this 30-year amortization, the mortgage amount has increased because we want to pay out the debts. So we will increase it a little bit to include also the legal fees. It comes to 287. So we're going from 265 to 287. The interest rate will be 4.44%. And we're locking in at $331 per week. So for a total monthly of $437. The payments have only increased by $7 here, if you can see. And that includes the condo fees along with their monthly property tax. So their payments are $2,310. Not much of a difference from their previous mortgage amount, but the payments have only increased $6, and they've increased their mortgage balance, but they don't have any household debt to pay the CIBC Visa along with the line of credit. So their payments have dropped about $655. So that's a big savings amount, which you can allocate to other things. Maybe put it monthly away for a trip, or, build a savings account on the side. Just, you can do a lot from that $655. Now, let's say you want to pay out the mortgage, the Visa and the line of credit, but you want to keep your amortization at $25. Your payments will increase a little bit at $2,452 to pay out your mortgage, your property tax, and the condo fees. But you're still saving $513 because you don't have the Visa or the line of credit here. So that is still a savings that you're keeping in your pocket. And that $513 can be used for other things in this market, especially with inflation, especially with kids getting more expensive, especially with having the economy being where it is. So this is just something I want to show you guys of how you would see the breakdown of how clients work with me when you're looking at a pre-qualification for a refinance, a renewal, purchasing a property. I do run the numbers with my budgets and my custom proposals, and you get to see it up front so that you know what you're getting into. So I hope this helps, and I'd like to, if you have any questions, feel free to reach out to me and watch how I do things here at Raman Mortgages. So let me know if you have any questions. I'd love to help you and, get you in a better standing with your mortgage if you need. Thanks for watching.